YouTube, it's Louis here. Hope you're all well. Today we'll be looking at Quant on the weekly time frame. We can see that currently we are below $122, which is the 55 weekly EMA over here. If we see a weekly close below this, it's a signal that we have invalidated this weekly bullish cross. It means that this is no longer weekly bullish. It means that we should actually expect downside. I've already spoken about the targets in yesterday's update. I've already spoken about what I think is going on in yesterday's update. Please do go check it out. Not enough of you were actually tuning in to yesterday's video, but yeah, please do go over to that video, yeah, let's dive into the daily time frame over here right now. We can see that yesterday's daily close, I was telling you guys that even if we run up, you're just running into these key resistances. Remember, we turned this green box back into the bear market box with this rejection. So yeah, I was able to tell you guys that when we closed below this inverse head and shoulders neckline, you invalidated the pattern's target to $400 unless we reclaim it. And I said, yes, even if we do reclaim it, which you can see now we actually did. Forget today's candle. Let's zoom in more. Forget today's red candle. Looking at the daily closes only. So we can only go off yesterday's candle. Every day, go off yesterday's candle. So yesterday's candle, you closed back inside. However, I already told you yesterday, you're just going to run into key resistances. That's what I believe. Even if you recovered the 200 daily EMA, yes, it's a signal to go up. But again, guys, you're just going to run into key resistance. Remember, this was green as long as you were holding it as support. But now you flipped it into resistance. Can you see where we had wicks going upwards here in the past? Here, where we had a dump as soon as we tapped it right there on the 8th of August. Here in March and Feb earlier in the year. So of course we're now starting to see those wicks going upwards instead of downwards, like here and to the left over here, where we had been using this key resistance as support. So that's why we essentially flipped it green. I was able to tell you now that we're above it, we're heading to 230, and I told you exactly on that day we're coming back down to the to the weekly EMAs, essentially around 130 to maximum down here at $120. I told you exactly on that date. We were basically calling it for 4 weeks, but the rest of crypto only started coming down literally this week. Quant was essentially leading the market. It was always leading the market in the sense that it was going up first, but it was also leading us going down because it was going down for 4 weeks. We had been saying for 4 weeks on this channel, we are going down. If you've been following, go back 4 weeks ago, go back to this exact day. Forgot exactly what day it was. But yeah, the week of the 17th, whenever we hit that key resistance, I was warning you guys that we need to come back and retest these key levels. And unfortunately, we have fallen through them. Technically, yes, if you hold this on the weekly time frame, the inverse head and shoulders neckline, as well as the 55 weekly EMA, you're still keeping this uptrend intact. But I must warn you guys, so if you were to hold it, you get this reaction upwards, right? But I must warn you that you're going to run into these key resistances. Remember, this is your bear market box. So when you lose it, you run into it as resistance. You run into it as resistance. So yes, if we were to reclaim it and head up, yeah, we would be coming back up to here. But this is not what should happen. You should have never lost this bear market box. So the fact that you have, yes, we've now fallen to a key support. If it holds, we're going to try and break through this. But really, it shouldn't break through it. It should be a corrective move upwards because we've now had this impulse down, correct? So we need to retrace into key resistance to continue lower. I've given you the targets already. This is a big range between 75, 83, and 92. These are your key supports, and this is your first level. So this will essentially act as some sort of low. If we were to lose this, this is going to act as some sort of local bottom where we could range here. But again, because we're under this bear market box, you would say this here is lower than this high. So that's a lower high. You should get a lower low. We've been talking about this scenario a handful of times in the past when we were coming up into this area, when we were actually coming into it before we even reached it. So it was many months ago now, but we were essentially saying the bears, until we're breaking above that high, they're always going to say that's a lower high, that's a lower high. So the expected scenario is a lower low unless we're breaking the high. So you have to invalidate that. You need to somehow find a higher low. That could be over here. So you could, let's get rid of all these drawings now. So that could be you fall down to here, consolidate. If it holds, you can see you have a big potential double bottom like this, ascending triangle over here, and you need to hold here and eventually break the neckline of about $200 psychological level. If at any moment you lose that, so once we do come down to in around $83 and we find support somewhere, then we'll bounce. I'm not expecting it to break the resistance. I'm expecting it to keep going sideways. But if it ever loses that uptrending support that we will have going into future, wherever this finds support, that's if we lose the weekly EMA, we're going to come back down to here. And then wherever you find support, because it's the range low, you're not going to instantly fall through it. You're going to have a reaction where you go back up to range high, and you could be consolidating for a while. But eventually it will decide. If you lose this ascending support, then yeah, it's back down to here. With the view that this should hold because it was the psychological level, it was our bottom. But yeah, if that's getting lost, remember from many moons ago, many moons ago, guys, I was telling you we cannot afford to ever go below $16. So in the future, I know it seems we're very far away. I know a lot of things need to happen, but yeah, we can never lose that. Essentially, we can never lose that. And I was saying that way back here. I was saying we can never go down there and lose that because that was your wave 1 high. If you want to keep this wave 5 intact, eventual wave 5, it might be that we are doing it from the bottom here. We're just finding a higher low and then continuing, making this final wave 5. Essentially, because this correction here was wave 4, wave 4 can't take out the first ever wave 1. And your first ever bear market was there, second over here. So this was wave 2 pullback, wave 4 pullback, wave 1 push, wave 3 push, and we're missing that wave 5. But yeah, again, guys, there's that risk that if we're not holding above $83, or this golden pocket over here, this green box over here, that's when we could be falling back down to the $50 psychological level. I hope that never happens. But yeah, for me personally, again, now that we're under this bear market box, I'm not expecting anything bullish in the near short term. So please, yeah, understand that. Unless we're reclaiming the bear market box. But remember, if you're under it as we are now, even if we're holding the bullish EMAs, that's technically weekly bullish. So you should do that. But again, because you lost such a key support, which I flipped it, remember, bull market support, you've lost it. So now it's bear market resistance. Do you understand? So that's why it would make, and that's why even yesterday already we got that key rejection on the daily time frame. So again, if we see another daily candle close below the 200, which currently we are, if we see another daily close under the 200 daily EMA as well as the inverse head and shoulders neckline, again, we've invalidated $400. But you've got until the weekly close, remember the weekly close, to climb back above this level. So yeah, I'll be here tomorrow and the day after and on Monday for the weekly close, for the new weekly candle, sorry. And I'll update you guys there. But please do check out the channel memberships, because I'm getting so many comments now. I really do appreciate it. Keep bringing in the comments. Let's get this video to over 200 likes. Of course, subscribe. 50% of you are not subscribed. If you guys did, then we'd be sure to hit 5,000 subscribers as quick as we can. But again, guys, I'm getting many comments from like bots now or stupid comments. I'd urge you to go check out the channel memberships. Those people will be the priority replies in the comments, because yeah, your names will pop out as they will have emojis next to them. Please go check them out. Like, subscribe, and comment. My course is 50% off at the moment. If you want these videos to become easier for you, where you know absolutely everything you need is compiled in a course. It took me over a year to make, so I've done it all for you in a 6-hour-long course. It's over 30+ videos. Just head over to my Twitter. You need to be following me there anyway, Louis_crypto. I've been posting multiple updates today, yesterday, the day before that. Please, guys, I post more updates over there than here to keep you guys as well informed as possible if there's any changes. Thank you guys so much. Like, subscribe, and comment. And if you want to take action on the 50% offer on my course, head over to my Twitter. Peace.